So the realm of content creation is slightly new, especially because of the internet and IRS. But guess what? It is common now. Hey guys, good evening. Welcome to the Money Zone. I'm your host, Folasade, the accountability accountant, guys. And yes, I'm 50 minutes late on Color People Time. But guys, look, here's the thing. You got to get used to it again. Like after being off for tax season and my body being drained, and then there's so much going on, y'all. You guys got to bear with me. But the blessing is that I am here and I'm going to deliver and I'm going to answer all of you guys' questions and be able to assist all of you because many of us are doing this content creation thing. We're either creating content to get affiliate income, we're creating content to get sponsored videos, we're creating content to promote our own products and our own services. So the realm of content creation is slightly new, especially because of the internet and IRS. But guess what? It is common now. You, me, every business, even the bigger corporations, they're allowing their team members to create brands and to build the firm that way because they know having a personal brand is where it is and it allows you to build your corporate business a bit faster. So in today's show, we're going to talk exactly that, the impact of content creation. And for those that are aspiring to be content creators, we're going to talk about what you can possibly write off, what information you need to track, what are the nuances behind this content creation thing, and then how do you even get started? Like that's one of the core things, like not how to get started with creating content, right? Because all you need is Instagram and an affiliate code, right? That's how you get started. But where do you get started? Okay. And please share the video because let's really be honest. There's only a few enrolled agents or accountants like myself that is really giving you guys the real about tax write-offs, about maximizing your tax deductions, about really playing this tax game. Yeah, there are people out there posting and giving you guys so-called strategies, but guess what? Those strategies they're giving you guys, they're actually going to blow up, and we're going to talk about that in today's show. So let's go ahead and rock this thing out. So if you're just coming in, we're going to talk about all things content creation, and it impacts each and every one of us. I don't care what type of industry you're in, what type of business you run, what type of brand you have. We are all using social media to create content like this. This live stream is content creation. This is long form content creation. Okay. So this is my pillar content. So after this live stream, my team is going to break down this video and then spread it across the social media platform. So even this video that you guys are watching right now, this is content creation. I'm just creating content doing a live stream. Okay. So we're about to get ready. I'm about to share my screen really quick, guys, because a lot of content creators, small business owners were totally surprised. So let's see.
So let's talk about it. For this tax season, I actually file under a content creator or influencer, and I've been influencing for. Let's talk about it.
Hold on, y'all. Okay, there we go.
I just owed $15,000 in taxes, and I just cried about it earlier, so let's talk about it. For this tax season, I actually file under a content creator or influencer, and I've been influencing for the past 2 years now full time. And let me tell you, the amount of money that I made this tax season compared to the last tax season is significantly different. Last year, I only paid $1,000, and this year I owe 15 times as much, which I'm so blessed and I'm so grateful. But when it comes to tax season, 100%, these are things that you should do as a content creator, and that is save a portion of your payments that you'll get so you can go ahead and save up for tax season. And here's something that a lot of people do not tell you: when you work a traditional W-2 job, you cannot do tax write-offs. But when you're doing content creation or you own your own business, you're able to tax write off a lot of things actually. And one that I actually did not know is rent. So the apartment that I'm wanting for this year, I actually get to tax write off a percentage of it because one part is going to be my office space. But let's not get ahead of ourselves. If you're wanting to get into content creation and influencing, digital marketing, anything like that, just do it. Just do it. Trust me. And do not let taxes scare you.
Okay, guys. So if you're just seeing that content creator, she said last year when she filed her tax return, she only owed $1,000. Okay. Now this year she ended up owing $15,000. Okay. Now that can happen in any business, not just content creation. One year you barely made $5,000, and then the next year you made $100,000. And guess what? You're in a totally different position. You will owe taxes. What do you do? So problem number one with the content creation. Guess what, guys? This is new to IRS. Creating content is new to the IRS. This is a new industry. They're not accustomed or aware that if you plop up on social media and sell and promote somebody's product, that you can easily make $200,000. The IRS is unaware of that. The IRS is also unaware that we're using our homes and buying things like this to create content. So what do you do? What do you do? You actually pay attention to live streams like this, and also courses that I'm coming out with, like my content creation course for influencers and business owners. Here's why: because we are in a new industry, so the IRS will be unaware of what documents they're going to need from you to back up your expense. You are unaware of what you're going to have to prove to the IRS to show that that cell phone that you have is also for business purposes, or the fact that you got your makeup done for a photo shoot. And guess what? You need to back up that expense. The IRS is completely unaware of this whole social media influencer content creation, from an influencer realm, business realm, and just from a marketing perspective. So what do we do? There's no code, there's nothing. But I do have one tip for you guys. And when I was doing my research, because I'm preparing for my course, and anytime I prepare a course for you guys, I really have to do a significant amount of research. Like, I need to know everything. So one thing I did notice was that as a content creator, you guys, especially my full-time influencers, you guys are similar to actors and actresses. You guys are considered somewhat in the entertainment industry. So because I'm experienced with audits, immediately when that came to my mind, I'm like, oh my gosh. So if we look at a content creator, they're similar to an actor. They're similar to a newscaster. They're similar to somewhat a celebrity. So how do the IRS audit celebrity? How do the IRS audit production companies? How do the IRS audit actors? And this is the mindset that all of you content creators have to have on your head. You also have to have the business mindset, the business acumen, but you also have to think about it. Oh my gosh, if I'm considered somewhat like an actor, an actress, in the eyes of an Internal Revenue Services agent, and they're going to pull those regulations regarding that to audit me, what do I need? And the challenge is, a lot of small business owners aren't even organized enough to even be able to back up their normal business expenses, let alone be able to prove if the IRS distinguishes you guys as entertainers, all of those personal / business related expenses. So why am I saying all of this, guys? I think we're in a bunch of pile of BS coming up. I think a lot of you guys are going to get audited because, number one, the income is, they don't even have a NACS code for content creation. There's not even a NACS code that is relevant to your industry. And the way that the IRS audit things, guys, they audit you aligned with the NACS code and the industry that you're related in. Or unless your business is cash basis, then they will use the cash basis audit techniques. But in normal standards, right, the IRS will find a relative industry and compare their audit techniques to audit you. But there's no audit techniques or standards or manual for content creation. So we're in trouble. So this is why I created my course to assist you guys, because just like that person said, she owed $15,000, but I have a feeling that she owed that $15,000, guys, because she didn't maximize all of her taxes. She probably did not write off all of her props. Like, for example, this is a prop, right? Let me give an example. My, what is this? I think this is an iPod, not an iPod, a Pivo. So I have something new. I have that gimbal now, but I had the Pivo. This is a tax write-off because this tracks us, in our home and where we are when we're creating content, right? This purse. Now, see, this is where it gets challenging. This purse that says what? It says what? I'm the accountant. For me, this is a tax write-off. This is decor in my studio. Okay. But if I was to get audited and I'm the accountant purse, you don't think the IRS could be like, purse? How is this purse a tax write-off, right? But guess what? It's in my studio. You guys probably don't see it, but it's been here all this time. Okay? So now, look at this. Normal picture frames. The normal picture frames. We have to buy picture decor and stuff for our home. But because we're in a new industry, if the IRS see our Marshall's bill or our Burlington's or wherever we're getting our home decor from, or wherever you're getting your stuff from, Marshall's, TJ Maxx, all of the stores, right? And the IRS see, y'all know what I'm talking about. When the IRS see that, do you think they're going to accept it? They're not. They're not. They're going to say, oh, well, you bought picture frames. Oh, that seems personal. Cross it out. Oh, you bought a flower. Oh, that's personal. Cross it out. Oh, you bought a purse. Oh, that's personal. Throw it out. But they might accept automatically the Pivo. But everything else around me, the IRS will more than likely throw out. And it's up to you as the taxpayer to say, guess what? I bought this for my business. But just saying I bought this for my business don't work, guys. You have to prove it. So let me give you an example. And this is an example of how I'm going to get down in the course. You see, I have this. I'd be like, okay, well, if this is not business related, how come in 90% of all of my videos, you see this picture frame behind me? And then I have 90 pictures of this picture behind me. That's how I would get that thrown in. Do you guys have the capabilities to know what you guys need to be able to keep all of your personal expenses, that your business expenses that are similar to personal expenses on your tax return? And from my professional experience, I think a lot of you guys, especially that's creating content, business owners, influencers, we're co-mingling things. I think 90% of y'all tax write-offs will be thrown out. 90% of y'all tax write-offs will be thrown out because you guys do not know what to show the IRS, what records you need. And guys, just having a receipt does not work. Just having your bank statement does not work. What is the correlation? Remember, guys, in last week's live stream, I broke down to you guys ordinary versus necessary. So first of all, we have to prove that it's ordinary and necessary, right? Then we have to prove that the business purchased it. Then we have to prove, guess what? That it's relative. And the problem is that the proven is to that agent. That IRS agent is the person that matters. So all of these influencers telling you guys, just write this off. This is a tax write-off. This is a tax write-off. That's not how it goes, guys. You have to have records after records, logs after logs, documentation, and you have to have a story, guys. And if you don't have a story, then the IRS is going to throw your write-offs out of the window. And guess what you're going to do? You're going to end up owing 15 to 20 odd something $1,000 in taxes. Because see, what you guys don't realize is that, and then I think this is where most people get the misconception of the tax system being voluntary. Yeah, you can voluntarily put anything on your tax return. You can voluntarily say you made $150,000. You can voluntarily say that you did $20,000 worth of miles. You can voluntarily say that you paid your staff $150,000, right? But if when it comes to you guys getting audited, then you bear the burden of proof. You bear the burden of proof. You have to now show the IRS that, oh yes, that $150,000, I did pay my team. Here's my records. Oh, that $20,000 in miles, I did drive that much. Here's my records. So for me, that is how the tax system is voluntary, because you could throw anything up there. You can voluntarily not even file, right? But guess what? When it comes time for them to see whether or not you were supposed to file, you need to prove that you wasn't. And then lastly, when they look at those expenses and say, okay, well, meals and entertainment, I'm going to wipe that out because you were unable to provide me with the documentation for that. Your travel, I'm only going to accept 20% of the travel because I still don't understand how that travel correlates to you posting on social media. This is what they're going to do. They're going to throw all of that out. And the reason why they are is because you guys have to prove to them that it's business related. And if it's not 100%, you have to be able to show what percentage your business utilized. And that comes from your basic expenses. So like the lady said, the girl said in her video, she said, oh yes, now I can go and buy the apartment that I'm going to go buy, and I get a tax write-off for that, right? You can get a portion of your rent as a tax write-off, depending on what your business used. But guess what? The IRS can also throw that out, especially as a content creator, when you're unable to prove to them the portion of your home that you're utilizing to create content. And then another thing, guys, a lot of you don't realize that there's levels to this. There's levels to business, there's levels to content creation. It's just levels to everything. And so what I'm finding is that a lot of you guys just want to jump right out there and just say, bam, I'm here. I have arrived. I'm ready, right? And you're spending $2,000-$3,000 to get the aesthetics. You're spending $5,000 to look the part, right? But guess what? That's not going to fly. There's levels to this. So guys, give me 1 minute break. I'm going to take a little intro, a little break, right? And then we're going to talk about the levels to content creation and how to avoid it being thrown out, and just slowly building up and then slowly building up your brand, and that connects to your taxes. But also this is relative to business owners, because a lot of you jump out there spending $30,000 and you haven't even made a sale. Some of you have invested in $15,000 coaching and you haven't even made $5,000 yet. There's levels to this. So we're going to talk about this when I come. Let me see if I can do it on time. When I come back, I'll be right back.